So 2020 is over. And while most of us are happy to see this dumpster fire of a year in the rear view, realtors know one thing to be true. The 2020 real estate market was a hell of a year, surpassing all expectations and breaking records along the way. And what does that mean for 2021? Will the housing market follow the same trajectory, or are we facing a possible downturn? Well, today we'll take a deep dive into what leading real estate experts are projecting for 2021. Hey guys, welcome to another edition of Fast Friday. I am your host, your favorite friendly neighborhood realtor, Andrew with the Chinatti Realty Group. So one of the biggest drivers for 2020's booming real estate market was the ever-falling record low mortgage rates. Now because of this, affordability reached one of the highest levels in the last 30 years. Although sometimes bidding wars made homes ridiculously unaffordable, with offers as high as $100,000 over asking. Now the good news is experts are predicting that mortgage rates will remain low for the foreseeable future. And despite home prices continuing to appreciate, historically low mortgage rates have made purchasing a home increasingly affordable, especially for first-time home buyers. Now, 2021 could see a slight increase in mortgage rates and home values, which would lead to a slight decrease in affordability for 2021. But if realtors thought they were busy in 2020, just wait until 21. Now that's because experts are predicting a 7% increase in home sales compared to last year. This signifies one big piece of news. We will see an increase in inventory for 2021. Now, whether it's homeowners who waited out the pandemic or new construction homes from builders, more inventory will be a welcome change from the last year, right? High buyer demand is expected to continue outpacing supply. And in 2020, we saw it at a faster than usual pace, averaging about 7% nationwide. Now for 2021, experts project that we will continue to see appreciation, just at a slower pace that's reflective of a more balanced market, somewhere in the 3 to 4% range. And while some might be worried that the rapid acceleration of home values means we're heading for another bubble, remember that housing is still in short supply, unlike 2008, which saw a tremendous oversupply with very little demand. Now, with the end of the pandemic in sight, experts expect inventory levels to rise and home prices to appreciate at a more steady pace. The massive wave of unemployment that came along with the pandemic led many homeowners across the country to enter mortgage forbearance. Forbearance, of course, is the temporary postponement of mortgage payments. And while unemployment is slowly declining, it may be a while before we reach the pre-COVID levels. Because of this, foreclosures are expected to rise. However, experts don't anticipate this will lead to a foreclosure crisis like we saw in 2008. They also don't expect it to lead to the major home value depreciation that followed. According to Lawrence Yun, the chief economist for the National Association of Realtors, any foreclosure increases will likely be absorbed by the market quickly, and it won't lead to any price declines. So despite everything that's happened this year, the real estate market not only survived, but thrived, playing a big part in our economic recovery along the way. The next 12 months are just as promising, with interest rates expected to remain low, buyer traffic staying high, and inventory levels predicted to rise moderately. And with multiple vaccines approved and being rolled out, we enter 2021 with hope and momentum for a brighter year. All right, guys, well, thanks for watching. I wish everyone the best for this new year, and I will see you all next Friday.